This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Welcome back onto the Research Talks podcast here from Stockbox with Alan Green. Now, we missed last week, Alan, didn't we? Because, of course, it was the Easter weekend. It's nice to get away from the markets and the screens for 4 days. We're going to get another chance in a few weeks as we have a coronation in the UK, don't we? So it is nice to have a few days break. But we're back this week. Did you have a pleasant Easter weekend?
Yeah, I had a great Easter weekend. Thanks, Mark. Yeah, a great time with the family. And the weather, for the most part, was pretty good. In fact, up to Sunday. But Easter Monday was pretty lousy. So didn't do much that day, but it was just, as you say, nice to have that extended 4-week break. Although I did note on some of the Telegram groups that I'm in, people were pinging up and saying, "God, I miss the markets. I wish the markets were very open." And so yeah, some people just like the that thrill of the market movements, the market forces 24/7. And that's it. But I mean, for me, and I know for you too, it's good to have that break because you come back refreshed. Although this week certainly has been very busy for us. We've had a very busy week in terms of clients and all the rest of it. And I was in town yesterday meeting with a few people, which was good to see people again.
And I believe you're going to the Master Investor Show this weekend, aren't you?
Yes, I'm going to call in tomorrow. Not going to stay for the whole day. We're up staying with family in Beckenham, so that'll be quite an easy run back across town for me on the tube or the train. So, but yes, looking forward to catching up with a few friends and faces tomorrow. So yeah, I'll let you know how it goes.
Yes, please do. That will be interesting. I know we're planning to attend the UK Investor Show in a few weeks and Minds and Money in a couple of weeks, Minds and Money Connect, and then the bigger Minds and Money or Resourcing tomorrow at the end of the year, which is a very good event. So yes, nice to be getting around and seeing people. But yeah, let me know how the Master Investor goes, because we won't be going to this one this time.
Yeah, but I will do.
Excellent. Good. So today we're going to actually cover a few different things, aren't we? We're going to talk about some of the sort of success stories now that we're end of Q1 this year, and also touch on some potential success stories for maybe Q2 or the rest of the year. So, I mean, one of the obvious success stories really is Premier African Minerals, isn't it? They've done extremely well. That pilot plant will be commissioned any day. Now I do have my my dates planned for going out to see the guys on site. I'll share them very soon, hopefully with everyone. Looking forward to doing that and covering the production there. That's a great success story. And of course, Marula Mining as well. Jason Brewer really blazing a trail there, not messing around with the work that he's doing there. So, I mean, do you want to start with those two, Alan, as to sort of sum up the what they've achieved really, and then we can talk about potentially some of the other ones to look out for, the hidden gems, maybe.
Yes, of course. Yeah. As you say, I mean, both these companies really are standouts for their progress thus far this year. Of course, the evolution of the Zulu lithium project for Premier was a fairly recent event. I think that it suddenly came back on the map, and of course the rapid progress that's been made from having the permissions put back in place to developing relationships with major investors. Of course, we have a company called Sizzle that subscribed to fund the DFS back in March last year. And then, of course, once the DFS was complete, we had numerous results which just showed that the Zulu lithium project was an immense project of huge value, and it's just a really exciting landmark event, I think, for the region. Of course, for the employment it's going to create in the region too, and this I know has been very prevalent across Premier's social media channels. George Roach has been very much front and center of that effort. Explaining how the miners developed. We've seen the plant arrive on site. the processing, the beneficiation plant, everything else. And of course, the pilot plant, as you said just now, is literally a few days away from commissioning. There were some initial delays, and the thing is, whenever a plant of this complexity is put into place, you're always going to get teething problems. It's inevitable. And there was an update from the company. So here we are now on the 14th, Wednesday this week. George Roach updating to the market and said the two pending matters for Zulu, which were reported on the 3rd of April with the delays, have now been fully resolved. There was a delay in getting the reagents to the site in order for the lithium plants, in order the lithium processing plant to be commissioned. That's now done. So they're now going through the final stages of process control implementation with the designers. And the first concentrate from the plant is expected shortly. Shipments targeted for the end of the month. So I mean, it's incredible. It's a landmark step, and of course we've seen that reflected, or that journey reflected, in the progress of the share price. So I'm looking at the share price performance over the last year. Started the year at 0.26p. We've seen the high just the last day or so of just over 1p. Company valuation is now 217 million, but that seems to me still to be a pretty lowly valuation for a company that's going to be manufacturing and shipping and distributing lithium concentrate for batteries worldwide into the EV industry. And I think I can add another perspective to this too, which will also apply to Marula. Having the benefits of running an electric car, particularly in the UK, are quite well established now. There are some very strong tax breaks, and we recently bought a fully electric car, and I have to say that all this stuff I'd heard about range anxiety and everything else, it's by and large complete poppycock, because the really good vehicles out there will give you a range of between 250 and 300 miles, and it's just so easy, and you can understand why people are really snapping these cars up. So it's a huge burgeoning industry. Governments have set their stalls out. They're going to be it's going to be fully electric cars, and of course, with a view to a future, hydrogen fuel cell cars too. But companies with plants producing lithium are going to be absolutely vital to this process, because it's a vital constituent part of the battery. So George and his team, Premier Africa Minerals, have entered the market at just the right time. They've gone through the hard yards, brought the project to fruition, and of course we're days away from shipment, which is incredibly exciting.
Very exciting indeed. Very, very exciting. And yes, right place, right time, given what's coming in the electric vehicle and the green economy shift. And that leads us nicely into Marula, doesn't it? Because that's, of course, where they're focused as well, in all those commodities.
Well, they are, but I mean, I met Jason in town a few weeks back, and the poor fellow looked exhausted. But and I'm not surprised. I mean, you look at what this company's done. I mean, when we first spoke about it at the start of the year, we spoke about this as one of our companies to watch for 2023. Share price was 2.4p. It's now 12.1p. And I've also heard, people saying that Aquis is a rubbish exchange and companies shouldn't trade on there. Well, if you're a good company with great products and you've got a plan for expansion, then it doesn't matter what exchange you're on. That progress is going to be reflected, because people who hear the story and want to buy shares in the company will buy shares in the company. And that's what we've seen. I mean, the progress has been, little short of meteoric. And of course, we're now at the point where the company's seeking an AIM listing to move across to AIM. But of course, I think probably better than anyone else, Jason and his team have been on site at the flagship project, which is of course the Blesberg lithium and tantalum mine on the Northern Cape in South Africa, one of the largest pegmatite deposits in a regional belt there. And of course, they're again, the investment that Jason's been able to attract, which includes a South African commodity group. He's also brought in a major investor into the company, Q Global. Quinton Vanderberg, of course, heading that up, and Quinton is going to be on the board of Marula at some stage in the not too distant future. But that's only part of the story. So we've got the Blesberg mine, which will be processing, of course, started last year, and there's some infrastructural development that will continue to take place there. They've got new local employees that they brought in from the region, and of course that is very much now in production. But it's they also have graphite interests, both in Mahuga and Sudan, which are in Tanzania. The company entered agreements with Tanzania company Casino Gateway for an interest in the Bagamoyo graphite project, and the surveys that have been undertaken have revealed graphite flakes in abundance. And of course, Tequila Mining, there's a joint venture signed there for the Kanosi copper mining project, and the rate of development across all of these projects is nothing short of meteoric, and that is, if you're going to bring a mining company to market and develop it and deliver value to shareholders, Jason and his team have written the book on how to do it. I mean, it is quite exceptional. You've got this company that has got these assets, pulled them together, a very strong management team, very clear leadership, and the fact is that Jason is able to attract this investment, because he's a pretty dynamic fellow himself, and he's able to execute the vision, but also impart that vision to investors, and that's that kind of sets him apart from a lot of chief execs, in that he's got that innate ability to do that, and it's quite a rarity. But that can be seen in the share price performance, and there are other companies that have also delivered developments and made progress, and it hasn't been perhaps reflected in the share price performance the same way. But equally, I think what the company did with Marula, the company at the start of the year was very modestly valued. So investors that got into that at that level have seen a multi-bagger literally emerge during the first quarter. So if you'd stuck sort of £5,000 or £10,000 into Marula at the start of the year, you'd be sitting on a pretty packet now, particularly if you'd well, of course, being Aquis, it wouldn't be you would be able to hold that in an ISA, but you can imagine the sort of gains that a company's delivered. And of course, now with a switch to AIM, investors will be able to it'll be exposed to a wider audience of investors as a result of that. So of course, I think the only challenge now is for Jason is maintaining that pace of progress. But I think given what they've achieved so far, given that Jason said earlier in the year that the Kanosi copper mining project's got these potential to be Marula's second operating mine this year. We've then got the progress on the graphite projects to boot. What next? But I think even at this level, at 12p, the company's got this company still has a modest market capitalization of just 15 million sterling. So in the current market, I don't think that's overvalued in any way at all. Particularly if you look at and see where Premier's valuation is now. Premier's got a valuation of a couple of 100,000 sterling with its operating mine. But given that Blesberg is pretty well or pretty close to being at that level too, I think Marula, in terms of valuation, has got an awful lot more to come.
Excellent. Thank you very much, Alan. Well, we've covered there two of the successes of recent times. So let's talk about what could come then. So we've got a couple of companies, haven't we, at least two to talk about here. So what do you want to start us with?
Well, we've got Altona Rare Earths, haven't we?
Yeah.
And of course, Altona, again, Aquis listed company, and it's had a difficult year because it's flagged up a long time ago. It was making the transition to AIM, but I know with other companies and clients we worked in the past that what appears to be a straightforward process can often turn out to be a long and protracted process, and that has indeed been the case for Altona Rare Earths. But again, the company's core project is the Monte Moambe rare earths project, and of course the company started out with three potential projects on the cards, which were then dismissed for various reasons. The company had a very distinct set of criteria in terms of projects they wanted to buy into, and of course the Monte Moambe rare earths project in Mozambique. The current chief ops officer Cedric Simonet has worked at that project for a number of years for another company, and he's intimately familiar with the terrain, the geology, and the potential at the project. So the company structured heads of terms to buy the Monte Moambe over a series of phases where money would be invested. An initial 20% would be acquired, then 51%, then 70%, and that's very much on course. And of course, the results that have come back have revealed a number of high potential assets under the ground there. In fact, the JORC target tonnage is now 56.6 million tons of total rare earth oxides at 1.65%, and certainly as this asset progresses, it's expected to establish a maiden resource estimate in the coming months, with a scoping study underway, probably to be completed by the middle of the year. So I think what has held up and capped the performance for Altona at this time is that transition. We've been awaiting that transition to AIM, and of course that has resulted in something of a limbo process for investors. But I'm sure that given we now have that established value at Monte Moambe, there's an understanding of the valuation there in the ground. So of course, it's valued as an asset at 1.4 million now. And once the company acquires the final phase 3, which would give the company 70% of the asset, then I'm sure Cedric and the team there will get to work and extract further value. So yeah, lots to come from Altona in the coming months.
Yes, indeed. Excellent. They just need to get that transition over, don't they? That's really something that's quite frustrating. I think everyone who is interested or invested in Altona, but it's always fraught with hurdles, isn't it, to try and get an IPO away or a transition over onto the main exchange or the AIM segment of the main exchange. But yeah, all being well, that will happen because they do have some great projects there, and there are not many, as we've said numerous times, opportunities to invest in rare earth companies. And
Exactly, yeah.
Cedric is very bullish on what's to come. So fantastic. Thank you very much, Alan. And then another one you want to highlight to us, is that right?
Yes, well, we spoke recently about this Sizzle Biotech.
Sizzle, yes.
Yeah, CIZ is the EPIC code. And Sizzle, of course, if you look at the share price performance over the past few months, we've seen quite a spectacular rise since the start of the year. Shares now trading at 3.3p. Were as low as 1.5p back in January. Already hit highs intraday of 4.8p, and with good reason. The company under the leadership really of Dr. Alan Sims, who's a life science and technology executive with 30 years experience, along with Professor Dawn Coverley, who have worked from the research group based in Yorkshire. They've worked to develop biomarkers through blood tests to detect lung cancer, which of course is a far less invasive process than the normal process of scans and CT scans and all the rest of it. And they developed this to a point where the tests and the hoops that the pharma and biotech companies have to jump through in order to establish the validity and potency of the treatment has been undertaken. And aside from that, the company also has a stake in a drug called AZD1656, which the potential of this drug was outlined in the Lancet, and the interest in that asset was crystallized through Conduit Pharma listing on NASDAQ with Murphy to create a $700 million company, and of course, the AZD1656 asset is part and parcel of Conduit. So it's crystallized value for several investing companies that own stakes in this, and of course, Sizzle have a 5% interest in the asset. So as the year has progressed, the team there have moved the C121B biomarker through its various evolutionary phases, and most recently, I discussed this last time, going back to AZD1656. The company had a put option in place with Conduit for the sale of the economic interest, royalty sharing agreement, to realize what could be a total consideration of 3.2 million to be satisfied through shares in Conduit. And they have a 6-month put option to be able to do that. The option value is 2 million. They had to pay a premium of 120,000 to execute that, and they now have, as I say, it's actually a 9-month term, not a 6-month term, to execute that. So that's a really interesting dimension to this, and of course that is in addition to the C121B biomarker. So that progress is reflected in the share price rise, and I think we're poised to see some big developments from Sizzle in the coming months. So very much one to watch.
Thank you. Excellent, Alan. That's good to hear. I do like Sizzle as well. Certainly the work they're doing in that early detection of lung cancer, that'd be fantastic if they can get that product all through the trials and tested into the market, because what a great little test that would be to try and detect cancer early. And it seems like, it's not new. We've spoken about them before, haven't we? And they've been working on it for a long, long time. It's just that they've now come to market to really get over the last few hurdles, access to the capital markets to take them to the point where they can actually make it into a business. So, yeah, very, very, very interested to see how they carry on. So, thank you very much for talking to us there. Any other companies, or are we sort of?
Yeah, well, there are two more I wanted to cover. We spoke about Lexington Gold a few weeks back, and of course, Lexington Gold has assets in Southern Carolina. It has gold assets there, which it's been working on and developing, and has made significant progress. In particular, the Jones Keystone Laughlin project. It's established a maiden JORC estimate of 4,380,000 tons at 0.9 grams per ton of gold. That's 128,000 ounces of gold, and that's a JORC inferred mineral resource estimate. And most recently, of course, they saw the asset was open, or the work that had been done. They saw the mineralization had extended. So we often see this once an initial resource estimate is undertaken, the further work is undertaken, they see that mineralization extends in different directions. And indeed, that's the case here, extends northeast and southwest. So much more potential to come from that. But of course, the company has a number of other assets there too, both the Jennings Pioneer project, the Carolina Bell project, the Argo project, and most recently, the company announced sampling results from the Jennings Pioneer project, which were very, very upbeat. And we've seen the share price lift back over the past few weeks. That there were, in fact, technically, it's quite an interesting read if you're a chartist. If you look back over the last few months, you'll see that there were a series of higher lows around 4.8, 4.7p, and then the shares bounced back over 5p. And we're currently trading at 5.2p, which gives the company a valuation of 14.8 million. But South Carolina is a great jurisdiction for mining. Lots of historical work undertaken there. It's a very mining friendly state, and of course, with all the infrastructure, roads, power, and everything else that are conducive to creating a very mining friendly backdrop for a company operating in the area. So very much one to watch in the coming months. And then finally, we spoke, of course, Mark, about Harland and Wolff at the start of the year. AIM-listed Harland and Wolff shares currently trading at 15p. It's had a meteoric rise last October. Of course, it announced a groundbreaking contract, the Fleet's Solid Services contract, to build 3 Royal Fleet auxiliary boats. And of course, being an ex-Navy man, Mark, you'll appreciate the importance of these to resupply the fleet at sea. There was some speculation as to the size of the contract, but the size of the contract is 1.6 billion, and that's going to mean something like 900 million to Harland and Wolff over the next 6 to 7 years. So, of course, the forecasts the group's been able to provide have been very upbeat, and we've seen much more of that over the recent months. And the company is also provided an update recently, a business update and outlook, which was very bullish. The company said it's got a weighted pipeline of new business in excess of 3.6 billion in revenues over the next 5 years. Of course, cash flow break even is expected in full year 2024. And of course, this is an iconic company with shipping works at the iconic yard in Belfast, where you've got the big H&W gantries, but also Appledore in Devon, and two shipyards in Scotland, both on the east and west coast. Plus, it has a stake, owns 27% of the Isla McGee gas storage project, which, despite court battle underway with environmentalists at the moment, that could be very important given the currently high energy prices going forward. So there's an awful lot of potential to come from Harland and Wolff, and I think this nascent potential, particularly that the huge amounts of revenues that will be coming into the company over the next few years. It's also going to mean an upskilling of the workforce. It's going to mean an upgrade of a lot of the infrastructural resources and the facilities the company already has, and will enable Harland and Wolff to tender for other contracts, given that it's got this upskilled workforce and upgraded infrastructure. So I think we've got a very exciting couple of years in prospect for the company.
Fantastic. Well, thank you very much, Alan. We've covered a lot there, all in just under 30 minutes. Thank you very much. A couple of good success stories and some stocks to watch that could also be good success stories as we progress through the year. So thank you very much for talking to us there today.
Thank you, Mark. Pleasure.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.